Today we have I think, a very timely discussion on the forefront. We're talking about 30-year mortgage rates and interest rates in general and how they're looking right now. We know that they've gone up above 7%, and they could go up even more than that. Maybe I know some economists and some mortgage lenders are saying it could even at some point reach 8% too. So what does that mean? What is it doing? It seems to be causing ripple effects, some concern about where these rates are going to be headed. So back with me again today to just dissect this topic and to discuss it. We have Ted Zimmelman, Shawna Ford with the Ford Home Team, and Alana Baldwin from RWM Home Loans. Hey, welcome. Good to have everybody back here.
Thank you.
All right, let's start, Ted, if you could, let's kick things off with you. What do you suggest buyers do in what appears to be a high interest rate environment?
Well, right now rates are over 7%, like you said. But we think if a buyer can afford the mortgage payments now, we recommend that they go ahead and purchase now and refinance later when rates drop. This way, they won't have to compete with all the buyers who are currently on the sidelines, waiting for rates to drop and find themselves in a bidding war with all these buyers, which will then push home prices just that much higher. So if they purchase now at the higher rate, if they can afford it, refi later, they'll be in a much better position than having to fight when rates do drop.
Yeah, that's a big concern, I would imagine, because people think, well, I'll just wait. I'll wait it out a couple years. I'll buy a home then. No, if you get it now, you can always refinance, something that people don't always consider. Because again, that home might not be there in a couple years. Thanks for that insight, Ted. It's pretty good. Let's go shift to Alana right now. Go ahead. One more thing.
Real quick, Tom. Sorry,
Yeah,
I was
yeah,
just going
good.
to say that, right now for buyers, there are also some great loan programs to help with the increase in home prices and the mortgage rates. And I know Alana is going to touch on that here shortly, but I just wanted to mention that there are a lot of programs out there to help buyers right now.
Yes. Okay. Alana, what do you think? Competition is likely intensifying because of fewer transactions, what it appears to be the case. I don't know if that is or not, but how can buyers stand really apart from the sea of other buyers and investors who are out there?
Yeah, definitely. It's pretty hard out there, even with the market that we're in and the high interest rates. There's still a lot of buyers and low inventory. So when you're dealing with these higher interest rates, you just want to make sure that you're comfortable with what you're purchasing and also to stand out just to get your offer accepted when you're competing with other buyers and investors. And one way in particular you can do that is a guaranteed 17-day close program. And this will set you apart from all other buyers because we at RWM can guarantee a closing of 17 days or less. And if we don't hold up to that, due to something that we did, we'll actually pay the seller $1,500 and the buyer $500. So
Wow.
it really sets you apart because the seller is more likely to choose your offer versus maybe an investor coming in with all cash because they can actually benefit. They know they're going to close in time. And if not, they get money back to them.
What is I mean, 17 days seems very quick. What is the average time frame, I guess, it takes to get through?
Yeah, your average escrow is a 30-day escrow.
Wow.
So if you want to be competitive, you want to shorten that to, I would say, about 17 days. We see it as soon as 12, 14 is probably the earliest because you still want to get an appraisal. You still want to get your inspections and do your due diligence. But even a cash buyer is going to take about 10 days.
Okay, so that's great. So we look at the interest rates, and I've been a homeowner for many, many years, and I know that the interest rates have a pretty profound impact on monthly payments. What are some buyers doing to keep their mortgage payments down, especially given the rate environment that we're currently in?
Yeah, and that's a huge one too, because a lot of people are saying buy now and refinance later, which is definitely an option. A lot of economists are predicting that we're going to stay pretty high till the end of the year. And some are saying a little, maybe even going up a little bit more. Right now, we're in the low sevens though. So it's still affordable depending on, what purchase price you're looking at. There's a really great program called the Temporary 3-2-1 Buy Down. And that is where the first 3 years, we could go up to 3 years, it'll be a discounted rate. So it's 3 percentage points less than whatever the today's market rate is. So if today, let's say, for example, is 7.375, your first year, you're only going to pay 4.375. And then the next year, you'll pay 5.375, et cetera. until you hit today's market. So worst case scenario, it's still just a fixed rate at today's rate.
Oh, wow. That's pretty amazing. So it's called the 3-2-1 buy down program.
Yeah, temporary buy down. It's almost the reverse of an ARM because it actually changes every year and then it's fixed. And the way to do that is you have to get a seller credit to help contribute towards the program. And then that credit actually pays for the difference for your mortgage payment. And it's a really great program because even if there's, let's say you want to refinance in 1 year, even though you have credit for 3 years, that extra credit that's unused will actually be applied to the principal balance of your loan. So you're not losing any of those savings.
Okay, that's wonderful. Do you know in general, I mean, how was, we're looking around, and I think historically speaking, I can look even back to 2003 or 4, we were looking at these kind of rates where they are right now. It's not horrendous. I think we're all shocked about this because rates did get down to 3% or whatever they were at the time, but they're now about 7%, might go up to 8%. Some say we don't know for sure. But historically speaking, are these just horrific as some of these TV news pundits are making them out to be?
No, they're always trying to fear monger, right?
Yes, of course.
So back in the day, they were up to 18%.
Yeah.
And that was definitely the highest. Of course, the purchase prices were lower. But now, even at 7 and 8%, we're still seeing people, multiple offers on a home because they know, at least here in San Diego, especially, your home is worth so much and it's going to appreciate over time. I think the famous quote from Will Rogers is, don't wait to buy a home and wait. It's such a good quote because it's true. It's a good long-term investment. And if you're trying to do a short-term investment, that's a whole different strategy. But if you're going to have a property for 2, 3, 4 years, it's definitely a great investment over time.
Yeah, that's great. I can remember back 20, 30 years ago, I was holding off to buy a house, and I should have bought a house and waited because now I'd be rich. Should have taken that advice. That's great insight. I don't know, Ted, Shawna, do you think that have you noticed at all, and maybe Alana jump in on this too, there has been a lot of news and rhetoric in the past few years about a lot of cash buyers coming out because there was a lot of competition, a lot of bidding wars, and some investors would come out and say, I'll just pay you cash right now. Do you see that trend at all continuing?
Right now, because of the competitive owner-occ buyers that are out there, investors are getting bid out. So investors are struggling to get properties right now because of owner-occupant buyers. And investors essentially have a tough time paying the market price because of what they need to net, whether they flip it or even hold it. There's a certain holding cost that they have. So it's really tough for them right now. Usually in like the short sale market that we had or a down market, it's more of an investor frenzy. So we're not seeing much as far as investors with cash, unless they're coming in competitive with the owner occupant buyers, because like Alana said, she can close them in 17 days, and we've done several transactions with her, and even the sellers are working with us to do that seller credit on the 3-2-1 buy down loans. So the seller's not only getting their price, but the buyers are happy and they get to live in the property as opposed to it being a flip or a short-term hold.
Yeah, I totally agree. I think that I don't, people are worried about how this is going to affect the housing market. And sure, I'm sure that maybe there's some people sitting on the sidelines, but I think it's an incredible time to buy a home and even sell your home, because in San Diego, there's still so much equity that people built up over the years. If you're thinking about selling, this might be the time. How do they get a hold of you if somebody's interested? They just want to ask you some questions, information about the housing market or what they can do in their particular situation.
They can reach us by text, call, email, or our website. And Alana is also linked to our website, so they can go to the financing tab and reach her directly for any lending questions. And it'll link to her website and everything to start the loan process.
All right. And all the information there at the bottom of the screen, you can also just click on, or you can scan the QR code there. That'll take you right to the website there at the Forward Home Team. I want to thank you, Ted, Shawna, Alana. Thanks for joining us today and for all the insight. Appreciate it.
All right. Thanks, Tom.
And thank you. Thanks to the listeners as well. Make sure to stay informed, stay safe as well. If you have any questions, feel free to call the Forward Home Team. Until next time, I'm Tom Jordan. Thanks for listening.